minus 4,000.
Let's do this. Getting the ball rolling, getting the ball rolling, rolling. Let's get those doggies moving. All right, get them in, move them all, round them up. Who's here today? Gina is here. Gina, the chosen one, is here. Hey, Doc's here. Daniel is driving tonight on a train. Ooh, J-Lock. What's happening, J-Lock? KK, what's happening? Michael, what's happening? Doc. Steven, J-Lock, Carrie. Alrighty. Let's get the ball rolling. Let's get started. Good evening, and how you doing? Hey, Alex. Alex Wide. Okay. Paul, what's happening? I'm in a good mood, but of course it's a lovely day to be above ground. Top tier, what's happening? Cherub Vogler. Okay. Paul Rod. Zanny Zoo. Star 543. Captain Derek. What's happening? All right. Let's get started. CW, what's happening? Juan, ¿qué pasa, amigo? ¿Cómo está? Yellow. Alrighty. Chris is here. Genevieve. Kratz. Cool name. Kratz. David G. Brockstar. Chin. Rich. Scott LG. Your YouTube is not working. Showing your setup screen. Uh-oh. Oh, yeah, there we go. That's why. That should be better. Yep, that should be it. Chris. PPL looks like it's set to go much higher. It will provide electricity for AI. PPL. You ever go full port into options? Now, I don't exactly know what full port means. But PPL, Chris, let's take a look at PPL. What the heck is PPL? PPL. Pakistan Petroleum. Really? It's a monthly, dude. That's a no. Kaysen, what's happening? So, Chris, just, quickly, Chris, I don't do monthly optionable stocks because the numbers just don't work. You might be relatively new here. What I'm looking for, let me just go over the quick basics. First and foremost, my name is James. This is what is that? Am I a scientist? No. All right. This is Dividend Stock Talk, where I invest in dividend stocks for weekly cash flow, taking you along for the ride for a simple, safe, predictable, and consistent 1% per week. Let's get this seventh camera running properly. There we go. And camera and video. Settings, no. Back to settings. Video, here we go. And let's do this. Alrighty then. Alright, so basically what I'm looking here is a simple, safe, predictable, consistent 1% per week. Now, I use what's called a dividend stock capturing 2.0 strategy. I don't expect anybody to know that. I came up with it myself. Simply put, my 9-year-old daughter back in 2008, that's what, 15 years ago? Wait a minute. 2008, 17 years ago? Holy cow. Yeah, a long time ago. She wanted to learn how to do what Daddy was doing. She said, Daddy, can you teach me to do what you're doing at 9 years old? Okay, fine. So, to teach a 9-year-old how to trade in the stock market, it had to be simple. She's only 9. She doesn't understand all that stuff. Safe. Well, we wanted to make sure she didn't lose any money because you know what would happen then? Predictable. I want her to know what she was making before she even did it. Consistent. Well, I want it to be something that she could do over and over and over again. And then no way to lose. That's 5. 5 criteria for a 9-year-old. Reason being number 5, no way to lose. Because we all know if a 9-year-old girl starts losing money and starts doing something wrong, she's going to cry. Daddy is going to feel like crap. Mommy's going to get involved. Daddy's going to sleep on the couch for a while. Yeah, the couch is kind of comfortable, but, we want to have a nice, quiet household. But anyway, that was 15, 17 years ago. 2008, we're here. Okay, whatever. 17 years ago. So, simple, safe, predictable, consistent, no way for her to lose. So, I had to come up with some rules. Rule number 1. For her, I'm going to show you something real quick before we move on. Market watch. Okay. Now, for my 9-year-old daughter, it was very simple. Number 1, if it is not on the list, it is a no. Now, what you're seeing here is a dividend calendar, an EX dividend calendar. What it basically shows, these little green dots, these are all the companies that are paying out a dividend, and these little dots represents the date in which they are paying a dividend. Now, these are all of them. Okay, so I don't do all of them. I had a very specific list, and we're going to get to the list in a little bit. So, for my daughter, for the 9-year-old, simple. If it's not on the list, it is a no. Only buy what is on the list. Okay, now it doesn't look like there's anything here, but there's 142 companies here. See, 142. 34 here, 33 here. Can't fit them all. Rule number 2. Never sell at a loss. It defeats the purpose of the whole game. And yes, this is a game. It's an adult game for adults to play with real serious money. Rule number 3. Make sure the company is consistently profitable. Well, you got a couple of choices. How do you figure out if a company is consistently profitable or not? Well, you could do what everyone else does. Read all the quarterly reports. Read all the annual reports to tell you exactly what the company's doing. Or you can be lazy like me and I go straight to the dividends. Why do I do that? Well, the dividend is a portion of the profits the company gives back to the investors. Okay, that's me and you. Once you buy the stock, you become an investor. If the company is profitable, they will pay a dividend. If the company's more profitable this year than it was last year, this year's dividend will be higher. If they're profitable even more next year, next year's dividend will be higher. So if the dividends keep going higher every single year, well, that means they are consistently more profitable year after year after year. Well, and it kind of makes sense. Go straight to the dividends. If the company's consistently increasing their dividends, well, they must be consistently profitable. Common sense, logic, okay? If the company's profitable, they will increase their dividends. If they consistently increase their dividends, they're consistently profitable. Me, I like 2 decades worth of increased profitability. Now, the stock market's been around for over 400 years. Okay, the first dividend stock was sold in 1602. Okay, it was the VOC, also known as the Dutch East India Shipping Company. They ran for about 198 years, and they paid an average of, get this, 18% per year for 198 years. Well, righty then. Well, let's see. Now, that was rule number 3. Rule number 4. Weekly options only. Do you see this right here? PPL. February, March, April, June, July. These are months. That means it is a monthly optionable stock. That is a no. You cannot get weekly cash flow from a monthly optionable stock. Okay? Weekly. 7 February. That's this Friday. 14 February. That's next Friday. 28 February. That's 3 Fridays away. 7 March. That's 4 Fridays away. 14 March. That's 5 Fridays away. So on and so forth. Every single week. Okay? Weekly options only. Simple. 2 criteria and only 2 criteria I'm looking for me. Now, all you guys out in the audience, you've got to figure out what is best for you. My 2 criteria, number 1, consistency of profitability. I'm looking for 20 years or more. Okay, you can do 5 years, you can do 10 years, you can do 15. You can do whatever you like. But for me, consistency of profitability and weekly options. That's it, only 2 criteria. Okay, I'm going to get me a big sign right up here. My criteria, consistency and profitability and weekly options. That's it. All right, I got a question over here on YouTube already. Christopher Lee, hi James. Yesterday you showed a covered call in US Deal where you priced it so that the option would sell but it wouldn't be redeemed. How did you figure out that price? Well, that's an interesting question. Hold tight, Chris. I'll talk about that in a second. I did have another question come up right behind that one. Steve. Having a little difficulty, my order ends up buys even though I put covered calls at the top of the bar. Just got off the phone with Schwab guy who was helping me ready to put some money to work. All right, Mr. Steve. Now, Mr. Steve, I understand you just signed up, I think, this morning. So we'll be seeing you in the morning trading group first thing tomorrow morning. And if you have any questions, load me up. Let me hear it, okay? So after we do all the trades, say, I'm going to go through 3 accounts. I share 3 accounts with my morning trading group. You see every single trade that I do. You can ask whatever questions you want. I'll stay on the phone. I will stay on the live Zoom call. So you can actually see my account. You can actually see my trades. Then you can ask any question you want. That's why people join the morning trading group. They want to see it in action. They want to experience. They want to ask the questions. Okay, so Steve, we'll see you tomorrow morning. Where was I? Rule number 4. Remember that? Weekly options only. The only way I'm going to get weekly cash flow. Shut the heaven, quit my job, yet I can make the morning meetings yet. I can't make the mornings yet. Oh, dude. Okay. So you can at least watch the recordings of the morning trading group. And if you want, send me a text. I will go on live, just you and I. When you get a chance, I'll help you set up your account and we'll ask some questions. We'll do a walkthrough, okay, because you are new. First time here. I'll do that for you. All right, so let's go on. Let's see. We have PPL is going to be a no because it is a monthly optional stock. So let's keep on going. DB XYZ. Are you kidding me? XYZ. I never heard of it. Reason being, more than likely. Oh, look at that. It does have weekly options. Okay. It's at $90. Before you get all excited about that, let's go on over to Yahoo Finance. Yahoo Finance. Here we go. Now, we're going to put XYZ into the Yahoo Finance. Now, I always tell people you got to find yourself a good financial website, one where you can look up information. XYZ. Now, I've never heard of it, and usually if I've never heard of it, it's more likely going to be a no. And here's the reason why XYZ is a no. Because I'm looking for consistency and profitability, which means I want to see what their dividends look like. I want to see that they actually share their profits. Sorry, I take slippers off. Get comfortable. The forward dividend yield. Nothing there. No dividends. Okay, EX dividend date. Nothing there. No dividends. So why would you show up? Seriously, why would you show up to a show that says dividend stock talk? The first part of the word is dividend stock talk. And then the second half of it is dividend investing for weekly cash flow. But then you give me a stock that has no dividends. So remember rule number 1, never buy something you don't understand. So apparently XYZ, you don't understand it. For some strange reason, you think you want my opinion. Well, my opinion is going to be no because I've never heard of it because they don't pay dividends. So we checked the other day. We checked the other day. There's 9,845 different companies available. Wow. Well, that's just not happy at all now, is it? Okay. So, if there's 9,845 companies available, and you like XYZ, but it has no dividends, why are you subjecting us to it? It's very simple. Dividend investing for weekly cash flow. No dividends, no thank you. So XYZ, no. That's a no. Did you expect a massive 5-minute green candle this morning? No, I didn't. Yeah, I don't ever expect anything. I wake up in the morning and I think to myself, what's going to happen today? That's basically it. What's going to happen today? You can't figure out what the market's going to do. It's chaotic. It does what it wants to do when it wants to do it. All right, let's get out of here. Back to, here we go. All right, let's see. We got some questions here. 33 questions already. I really like to pretend I didn't see that. Alrighty. Chasing Jack. Hello, James. Thanks for the phone call. Hey, not a problem. Like I tell people, if you want me to call, drop your phone number in the DM. I will give you a call. People even go to the email address. They email me their phone numbers, and I call. I was on the phone like, about 2 hours today calling people. Do you only do American companies? Unfortunately, Tuck, I live in America. I don't know anything about the Canadian market. I don't know anything about the South American market. I don't know anything about the European markets. I don't know anything about the Indonesian markets. The only thing I know about is the American markets. That's what I'm doing. That's what I'm good at. Paul Rod wants to take a look at Coca-Cola. Dividend King Extraordinaire has been around for over 140 years. Let's take a quick look. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at the flow. I'm looking for 5 things. Okay? High, low. Where was it? Where is it? What's the direction? Sideways, up, down, up. Okay. That's what she looks like. So we're going to zoom in a little bit closer, but before we waste our time on the chart, Coca-Cola usually never has really good premium, so let's see what the premium looks like. So if I'm going to buy it first thing tomorrow morning, I'm paying $63.50. Okay, that's the current price. So currently, $63.49, the closest strike price is going to be the 64. And it's going for 38 cents to 45 cents. It's not quite 1%. I think in the 20 years I've been doing this, I might have bought Coca-Cola once. Because the premiums just aren't that good. Now, if you're okay with getting 24 to 30% per year, fine. Do Coca-Cola. It's a great company. It's been around for a long time. They have stood the test of time. Dividend King, they've increased their dividends to the shareholders for more than 5 decades. More than 5 decades. They've seen a lot of crap. They've been in business since the 1800s. All right, let's keep on going. So Coca-Cola's going to be a no. Bitto has been paying almost $1 monthly. Okay, Bobby, I got a problem with Bitto. Here's my problem with Bitto. You ready? BITO. We're going back to Yahoo Finance, Bobby. And it doesn't look as if they even have any dividends. So let's go look at historical data. Down here on the left. Historical data. Bitto. Okay, right here. Historical prices. Dividends only. Okay, here's the dividends. Now, it says February 2024 to February 2025. Well, I want to see all the dividends that Bitto has paid out. All of them. Okay? And then, what are we going to look for? We're going to look for a couple of things. Number one, we're going to look for consistency of increased dividend. That's number one. Number two, we're going to be looking for how long have they paid dividends. Well, take a look at this. February 1st, 2023 was their very first dividend. This company's only 1 year old. That's like throwing the keys to your brand new car to a toddler. What the hell are you thinking? It's 1 year old. Okay? I want nothing to do with it. Yeah, I did do some BitTo last year. I made a little money off of it, but it made me queasy because it's only 1 year old. And look at the dividends, just for the fun of it. Look at this. 15, 10, backwards, 47, 42, 43, 66, 39, 1, 7, 14, 13, 15, 36, 73, 150, 168, 177, 150, 145, 121, 109, 99, 1, 111. There's no consistency there whatsoever. So you like BitTo, good luck with it. Me, I like 22. 2 decades, 20 years of increased profitability. This thing doesn't even have 1 year yet. So this one's going to be a no for me. What do you do when you lose the shares to ITM calls? Okay, Tuck. What you're missing, Tuck. You're missing what a covered call is. Now, we're going to do a couple examples of covered calls, and hopefully you'll say, I get it, because it's really not that difficult. Why is the camera off? All right, so where were we? Oh, so when you're doing a covered call, basically what you're doing is you're buying the stock. We're going to do a sample. We're going to find a good sample first. We're going to do a sample, and we're going to show you exactly what happens. Because basically we buy the stock and we sell the rights to someone else to buy it for the same price. James, how are you today? So if I buy, hypothetically, Coca-Cola at $63.49, I sell somebody the rights to buy it from me at 63. All right, so at 63, I pick it up at 89. So the difference between the three is 40 cents. That's right around a little over 0.6. 0.6 would be, hold on a second, 26, 20, about 28, between 28 and 30% per year, if you're okay with that. Now, if I'm buying it $63.49, I'm selling the rights to someone to buy it from me at 63 and picking up 89 cents. If the stock stays where it is or goes up, somebody will take that stock away from me. What I'm looking for, I'm not looking for capital appreciation. You're thinking I'm buying the stock and I want it to go up. No, I don't. I honestly don't care if it goes up. My concern is consistency of profitability. Are they consistently profitable? Am I making my 1% every single week? The only way I'm going to do my 1% every week is if I buy it $63.49 and then by the end of the week somebody buys it from me. Well, I get all my money back that I paid for it plus an additional premium, which is right here. Is that premium more than 1%? That's what I'm looking for. That's like I go to the store, I buy a 6-pack from my neighbor. My 6-pack, my neighbor gives me the money for the 6-pack plus a little bit extra. Same thing. But here we're doing it with stocks. Okay, I'm buying a stock, selling it to my neighbor for the exact same price I just paid for it. He gives me my premium and I get all my money back, and that means I'm making 1% return every single week. So 1% a week comes to over 50% per year. And if 50% per year excites you, well, let's see. Just sit, chill, relax, try to absorb what you can. If it makes sense, great. If it doesn't make sense, ask questions. That's what I'm here for. I'm not trying to sell anyone anything. I'm just here to answer questions. Pure entertainment only. All right, what do we got for more questions? What do you do? Okay, we did that one. Chasing Jack. Changing my whole portfolio, selling my stocks on covered calls and start the new strategy. Chasing Jack, that sounds awesome. Dill, Toshi, I have no idea what that means. Are all those dividend pay dates? Yes, those were. Dividend Stock Talk. Is your actual account or someone posing as you? Oh, well, see, Dennis, that's an interesting question because I'm not quite sure how somebody could pose as me during a live show. Because this is live, okay? This is live TV, nothing rehearsed, nothing structured, just live, right from the hip. You ask me a question, I'll answer the question. Okay, Andrea wants to take a look at APA Apache. Ooh, I like APA. DB, Block changed its name. I have no idea what that means. Tim McCarty, wouldn't it be easier to take more positions than just 5 in a good-sized account? All right. See, Tim, I got 7 accounts. I say, eventually, at some point, okay, I am going to open up either a mutual fund or a hedge fund. Well, I don't really think about safety in that manner, so to speak. Okay, so what I'm looking for is consistency and predictability with good companies. Now, just before the EX date, let's go back here so you can see this again. Okay, so here's the EX dividend calendar. Now, what I'm looking to do is basically buy companies that I like. See, I will create a list. Eric, hold that thought for 1 second. I will create a list of stocks that I like. Most likely those stocks are going to be companies that have consistently increased their dividends for at least 2 decades. So this is what we're looking at. Ben Franklin, McKinnon, Illinois Tool Works, Nucor, APD, Cardinal Health, ESS. I have no idea what that one is. FRT, Frontier, Nordson, Roper, so on and so forth. All these companies have 25 years or more of increased dividends. Find a list. Import them into a calendar. The calendar tells you when the dividend is coming. Why is that important? Because just before the EX date, that's these little green dots, just before the EX date, the stock has a tendency to go up in value. So knowing that a stock is going to go up in value makes it easier for me to decide whether or not I want to buy that company. Because number one, I want the odds and probabilities in my favor, which means if they're just about ready to pay a dividend, it means the stock usually goes up. If the stock usually goes up and the chart is... Hold on a second. Here we go. The chart. Now, I always pay attention to the chart. It tells me where the high is, where the low is, which direction it's going, blah, 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 blah. I never want to buy as it's coming down. No. I don't want to buy when it's at the high of the year. See where it's at the high of the year? I don't want to buy it up there. Okay? Right here is where I want to buy. Okay? Stock comes down after this profit taking a high. Get the high, profit taking. So you got some recouping here, turns around, goes back up again. That's where I want to buy. And it's not that difficult because you go over to the calendar, the calendar, you tell you which companies are coming next. Well, I want to see Hormel, AbbVie, Abbott Labs, General Dynamics. Those are the only ones I want to see this week. That's it. I don't want to look at these and I don't want to look at those. Just these this week. That's it. Pick one or two. Great. Jump in on Monday. Hopefully be out by Friday. Okay, we got a question from Eric. So you start your covered call in the money on Monday after you purchased 100 shares and then you sell the covered call. Exactly, Eric. Simple, easy, right to the point. Safer. Yep. All right, so let's give some more of these questions. Okay, Andrea wants to look at Apache. So let's go to trading, Apache, APA. APA. Alrighty. Here we go, APA. I'm looking for 5 things. Anytime I look at a chart, the very first chart I want to look at is the 1-year chart. Now, when you're on Thinkorswim, which is this, the default setting, which means as soon as I turn my computer on, it's going to show me a 1-year chart. Whatever stock symbol is in the little block up here, that's going to show me. It's going to show me a 1-year chart. I'm looking for 5 things. Every chart I'm looking for the exact same 5 things. Number one, where's the high? Number two, where's the low? Number three, where was it a year ago? This is the 1 year chart, so it's 1 year ago. 4, where is it now? And then 5, I want to take my little finger like this. Up, down, up, down, up, down. You just trace it, it's all. Up, down, up, down, up, down. Okay? Not that difficult. Before I check on the numbers, I want to make sure this is not at the extreme high of the year. I don't want to do that. I don't want to buy it if it's dropping. See, right here is okay because it hit the bottom, turned around, and now it went back up again. Okay, I'm okay with that. I don't want to buy it at the bottom. I want to look at it. I don't even want to bother looking at it when it's at the high. No thanks. Because when you're at the high, people are going to take profits. They take their profits, the stock comes down. Why would I want to buy at the high? It makes no sense to me. Okay, so let's fix this a little bit because I can't see that. There we go. Now I can see it. All right. So that being said, the high, low, where was it? Where is it? What direction is it going? Okay, great. Once I get past that, I want to check out the numbers. Is it going to be worth my effort? Remember, I'm looking for 1% a week. Simple, safe, predictable, consistent 1%. All right? It's not that hard. What am I buying it for? Get the bid, the ask, the high, the low, the open, the close. Okay? And then you have the volume. Okay, these are numbers you need to know. Hi, I'm from India. Namaste. All right, so that being said, I can buy it tomorrow morning at 22.09. The closest strike price to 22.09, well, it's going to be 22. Right here. And the 22 is going from 18 to 21. But we've got a minor issue here. One minor issue. I don't know if anybody caught it or not. Look at the last traded price. The last traded price is 21.47. 21.47, hypothetically speaking, the stock should open up at 21.50, somewhere in that area. Namaste. The 21.50 would give you 1%. So here's something you need to remember. We are in after hours at the moment, which means these numbers don't change at all after 4 o'clock. But at 9:30 tomorrow morning, all these numbers are going to change, constantly changing. So what you're looking to do a little bit of math, it's not that difficult. You find the price in which you're going to buy it for, which would be the ask price. Ask is what you buy it for. Bid is what you sell it for. So if I'm buying the stock, that's the numbers up here. Hold that thought for 1 second. Okay? The stock prices are these numbers up here. The last traded price, the opening of the day, the high of the day, the low of the day, the close of the day, the bid, the ask, the volume. All the numbers are right there. That's for the stock. Now, I like to buy a stock when it is in a nice upward trend. But let's see what we're looking at here. The numbers I'm going to show you next is the option chain. Basically, I'm going to buy a stock, and then I'm going to turn around and sell it to somebody else using a covered call. Now, I can do it the exact same time as I buy it. I can buy it and sell it at the exact same time using a stock option strategy called a covered call. If you don't understand what a covered call is, there are literally hundreds of videos on YouTube that tell you. You buy a stock, you sell somebody the rights to buy it from you at a certain price by a certain date. So what are we looking at? Currently it's at 22. I'm going to buy it, the stock, at 22. I'm going to turn around, sell somebody the rights to buy it from me at 22. I'm going to collect 18 cents a share. It's kind of like a non-refundable deposit, but is a legal binding contract. You need 4 items for a legal binding contract. 1, an agreement buying the stock from me at a certain price by a certain date. Okay? Consideration, money. So Someone's going to pay me. Okay? Then the meeting of the minds means we're both talking the same language. You need a beginning date and ending date, meeting of the minds, and consideration. So the beginning date is as soon as somebody pays that money. The ending date, well, that's right here, 7 February 2025, 3:59 p.m. on Friday. Now the option expires on Saturday, but after 3:59 p.m. you can't do anything because the market closes at 4 o'clock. So you have between the time you buy that option or whoever buys that option until the expiration date. 3:59 p.m. Friday afternoon on the 7th of February. If you don't like that date, well, go to next week. Next week is 14 February. It almost looks the exact same. But the only difference between this Friday and next Friday is the amount of time. So today, Monday, okay, we have 4 days of time value. See, 7 February has 4 days of time value. 14 February has 11 days of time value. See, time value, it's kind of like when you get older, you're going to wish you could buy time. Well, at this point, we're selling time. All right? So if I want to go to 21 February, well, 21 February has 18 days of time value. So here's the question you need to ask yourself. If I'm buying it at 22 and I sell it to someone at 22, okay, 4 days, I can get 18 cents a share. 11 days, I can get 40 cents a share. That's twice as much. Okay, 18 days, I can get 53 cents a share. So think about it. If I buy it, okay, at the current price, $22.09, I can sell it to someone, anyone. It doesn't really matter who buys it. You can't choose who you buy it from or sell it to. You have one person to sell it to and only one. And you have one person to buy it from and only one. That is the market maker. His job is to buy and sell whatever you want. And he's the only one that can do the buying and selling. He's the one who makes up the prices. All right, so that being said, let's take a closer look at Apache. And it doesn't look like it's going to be a good one. We're not even going to look at the whole thing because look at what we're looking at. The 30-day highs right here. And it's just it keeps dropping. Okay, now, I do like Apache. It is on my list. However, as it's dropping, I don't want to touch it until it finds the bottom. So this thing is bottom fishing, looking for that bottom. Could it hit it tomorrow? Yeah. Could it hit the next day? Yeah. Do we know? No, we don't know. It's guesswork at the moment. So if you like the company, great. It's coming. It's right around the corner. It's not today. Okay. Now for me, I like 2 days to the upside. Let me show you something that might be able to equate with this. All right, right here. Okay, see where it's here and it drops? Here's the bottom right here. Well, how can you tell it's the bottom? Because look how many days it went up afterwards. Bottom, 1, 2 days to the upside. I want to jump in on the third day. That's me. Okay, same thing here. Here's the bottom, 1, 2 days to the upside. I want to jump in there. See, if I like a company, I will watch it. And I will watch for opportunities just like this. Because here's an opportunity, and I don't know how many of you see it. Okay, here's the 30-day high. Here's your 30-day bottom. You can only have one 30-day high, and you can only have one 30-day bottom. Well, here they are. Okay, it went from 25.75 all the way down to 21.50, or almost down to 20 or 21. Okay, that's a big drop. It's the $4 drop on a $25 stock. That is almost a 20% drop. Almost 20% drop. So yeah, profit taking. It's going to turn around. It's going to go back up. Well, when? We don't know. Could it be tomorrow? No, because I like 2 days the upside. If she's up tomorrow, that's only 1 day. So Wednesday could be the earliest I would jump into Apache because I want 2 days for it to turn around. Find the bottom, turn around, and go back up again. Because if you think stocks do anything other than going up or down, you're sadly mistaken. They don't come to your house. They don't wash the dishes. They don't take the dog out for a walk. They don't rake the leaves. They don't iron your laundry. They don't even make the bed and put those little candies on your pillows. Nope. They go up. They go down. That's it. Hey, the boy Jeffy. I haven't seen you for a couple of weeks, dude. How you been? All right, so let's keep on going. Unfortunately, Apache is not going to be for this week because all my money's already been invested. I invest all my money on Monday. Well, that was today. I spent all of my money. 98% of all my money is invested at all times. I don't have anything in cash. Well, maybe a few thousand. That's about it. Because I don't really need anything. You know, I'm 61. I have everything I need. Okay? So all my money is working. I don't keep it in cash. If I need to buy something, that's why I have credit cards for. So all my capital, all my working capital, even most of my emergency fund is in working in the stock market. KK, you missed a call from me this morning. Try me again tomorrow, and I'll have you locked into my caller ID. See what I can do, but you're going to have to send me your number again. Because the way I have it set up, in order to keep from getting overloaded with phone numbers, okay, you send me your phone number. I will call, and as soon as I dial that number disappears. So if you want to call me, you actually send me your number again. Because I don't like to keep a whole list of. Tell this all. Tell this all. I have no idea what that means. Dylan, sorry, I don't do Forex. Sorry. No Forex, no cryptocurrency, no smart contracts, no futures. I do investing in dividend stocks only. That's it. If you get a text message saying, I have a great deal for you, yeah, that ain't me. When I always hear, every night you hear me say, if you want to talk to me, send me a number, I will call you. You don't believe me? Ask in the chat, does he really call? You have a whole bunch of people saying, yep, he does. Now, somebody just said you called and missed my call. Okay, I don't have a schedule. Okay, this is not a business for me. This is a hobby. Okay, I do this in my spare time for the fun of it because I enjoy it. Okay, I am pissed off at the man. You know, the what do you call it? The powers that be. I'm pissed off. I am because I get the brown end of the stick just like a lot of you guys do. Okay, I grew up saying, you know, go to school, get a good job, do this, and then retire with this. No, it doesn't work. Why not Forex? Because I don't want to sit in front of the computer all day long. That is such a simple answer. Why not Forex? Because I don't want to sit in front of the computer all day long. When you become retired, when you're no longer working, you have a different outlook on life. Okay, my kids are all grown. They're well on their way to being self-fulfilling adults. What do I think of XRP? Didn't I just say I don't do cryptocurrency? No cryptocurrency. Until you have a way to safely, predictably, consistently obtain a 1% per week without sitting in front of the computer, I'll do it. All right, so I'm going to put Apache. You just go on. All right, Big Sexy. I love the name, dude. I do. It's a cool name. All right, I'm going to put Apache down for next week, Andrea. Only because I like the setup. Okay? Apache, APA. A. Freaking pencil. All right, so APA is written down for next week. Let's keep on keeping on. What do we got? Block changed its name. Lovely. Uh-oh. Big Sexy, you're welcome, dude. Okay, Big Sexy, when you're tired of that game and you want a consistent 1% every week, now I know 1% doesn't sound like what you're looking for, especially if you're doing Forex, but it does come to over 50% per year. Once you get to a certain point, you're not going to need all that money. You only need a certain amount. Okay, greed is going to take you so far, and it might be the death of you. You never know. Okay, Akshan Kasim wants to look at JEPQ. Hell no. Okay, so do me a favor. Okay, I'm going to be here until 11:30. Okay, you like JEPQ? Do me a favor. Go to any financial website whatsoever and check the consistency of their increased profitability. Okay, and what are they offering on an annual yield? Once you find that out, then come back and ask me about JEPQ again. Okay, Devin. Yo, brother. Hope you've been well. I just tried dividends today and it canceled on its own. Okay, not quite sure what that means, but all right. Did make 40% on stocks my first time. Okay, nothing wrong with that at all. Good evening, James. Intel looks good. Yes, it does. I actually bought some Intel this morning. So let's take a look at Intel. INTC. INTC. How would you invest $500,000 today? Big sexy. You realize 500 grand, 1% of 500 grand is $5,000 a week. Now, when I say 10 to 15 minutes a day, well, that's only about 1 hour a week. 1 hour a week for $5,000. That's not that bad. Okay? That's $20,000 a month. $20,000 a month, $250,000 a year for 10 to 15 minutes per day. An hour a week. An hour a week for $250,000. Big sexy. Let that sink in. Okay? All right. Intel. Here we go. 5 things I want to look at. The high, the low, where was it, where is it, and what's the movement? Take your little finger, a little finger like this. Sideways, down, sideways, up, down, up, down. Here we are right here, 1938. That's where we're currently at, 1938. Now, I like Intel. Big sexy, so where do you invest in? Eric, how far back do you look, and what do you look for on each time frame? Okay, Eric, did you or did you not just see me do this? 1 year. That's all I'm concerned about. 1 year. Now, I don't go back way back in the future. In the past. That's funny. Way back there. Okay, what I look for is consistency of... Oh, boy. I say it like 500 times a day. Consistency of profitability. It just escaped me there for a second. I'm looking for consistency of profitability. Is the company consistently profitable? Okay, the stock market has been around for 400 years. Which companies are consistently profitable? You decide which companies you like. Me, they got to have 2 decades. That's 20 years of profits. Big sexy. Know where you were in the 500 grand? Yep. Got it. I don't see it. I'm listening. Sorry. Oh, okay. I'm looking for consistency of profitability. Now, you have companies kind of like Home Depot, Lowe's, Bank of America, Walgreens, Wells Fargo, AT&T, MasterCard, Visa, American Express, Discover, okay, Capital One Finance, Procter & Gamble. Ooh, Tootsie Roll. Nice. I like that one. So anyway, there's literally hundreds of companies that I look at. Big sexy. Where would you invest $500,000 if you had it? I like the way you assume that I don't. But hey, okay, now big sexy, what you're missing. This is what I'm looking at. All right. Ready, big sexy? Check this out. CVS, Foot Locker, Halliburton, Kohl's, Macy's, Riley, Riot, Starbucks, Sears, Walgreens, and U.S. Steel. That's just one account. Next. Ford, Harley Davidson, Intel, Kohl's, Macy's, Altria, Riley, UPS. Whoa. Let's turn this off. Okay, Alexa, off. So, big sexy. I'm talking about U.S. companies. God of Well. Yo, what's up? I'm glad I got here on YouTube. All right, cool beans. So Big Sexy, I'm looking at companies that we grew up with, household names, names that you've heard of. Lucky Larry, how you doing? I don't buy companies you've never heard of. It doesn't make sense to me. If I grew up with it, if I know who it is, if I know what they do, and they're consistently profitable, yeah, I will buy them. Okay? Now, for the fun of it, let's do this for a second. What do we have here? Oh, here we go. All right, check this out. Okay, now this is Warren Buffett's list. Let's go for this side. Mandalese, U.S. Bank, American Express, Bristol Myers Squibb, Verizon, MasterCard, Globe Life, AbbVie, Procter & Gamble, Moody's, Bank Mellon. Okay, I don't know if you've ever heard of those companies before. Siri, Wells Fargo, Kroger, Chevron, Visa, Apple, Johnson & Johnson, RPRX, T-Mobile. Let's go a little bit more, a little bit. Oh. Come on. Bank of America, General Motors, T-Mobile, Heinz Ketchup, Kraft Heinz, Occidental Petroleum, Coca-Cola, Mandalese U.S. Bank, so on and so forth. This is just Warren Buffett's list. Okay, now I have stocks that are over 100 years old, and I have that list. Well, that's a couple of nice, good companies there. And then I have companies that are consistently profitable for 5 decades. Those are called the Dividend Kings. Consistently profitable for more than 5 decades. And then you got the Dividend Aristocrats. 67 companies that have consistently profitable for 25 years. And then Steve Tucker, sounds like Big Sexy might be in need of financial planner. You never know. But needless to say, there's about 300 companies that are consistently profitable for more than 2 decades. That's 20 years. Every single year. Higher and higher and higher and higher profits. Those are the only ones that make sense to me. So if you're thinking about some new stocks that's going to go from 0 to 100, yeah, this is not the right place. That's not what I'm looking for. I'm not looking for the next hot stock, the next shiny object. I'm looking for companies that are slow, boring, monotonous, and aggravatingly freaking slow. The reason being, I'm 61, I'm retired. I don't want to go back to work. I could, okay? I still play soccer in the adult league, I was in the over 60s club, but now there's not very many of us there. So I play in the club over 30s. So I'm in the over 30s club, and yeah, I'm one of the older guys on the field. But this one guy, he's 74 years old. He still gets out there and plays. I was like, hot damn, I hope I'm still doing it when I'm 74. But anyway, James, Big Sexy, you could do 8 to 10, 12% SPX. Why do it annual? An annuity. Ooh, yuck. Did somebody say an annuity? What the hell's the matter with you? An annuity? Did I miss that question? What do you think about annuities? You gotta be shitting me. All right, Big Sexy, you're new here. So let me just briefly explain what I'm doing here. What I'm showing you is a trading strategy I created for my 9-year-old daughter. 9 years old. Okay, hold on a second. Hold on. Just hold on a minute. Before we go much further, give me a dime so I can phone my mother. Okay, here we go. We're going to go back to YouTube to show you one of my old videos. Videos right here. The oldest videos right there. And here is the little princess herself. We just had dinner this evening.
Hi, I'm JC, and as you being part of my internet website called Penny, which my dad doesn't let me call me that, but I do. Being part of that, you're going to be getting weekly lists of stocks that I'll be trading, and every month you'll be getting 4 lists of stocks that you can choose from that'll help you with the best trade every month.
For 20 days.
And there's me 15 years ago. I had more hair. Look at all the hair. No gray. No gray. It's my favorite part. Okay. Yeah, I got a little silly with my daughter because I got to keep her entertained. You know, how do you keep a 9-year-old entertained when you're talking about stocks? Well, I had to make it fun. Yay! Okay. So she was averaging. Okay, big sexy. My 9-year-old daughter was averaging 5% per month. And you're thinking of investing your money at 5% per year? Think about it. You saw her. She wasn't a Mensa student. Mensa student, I don't know if you know what that is, but she wasn't an honor roll math class. She was just a regular, average, ordinary, everyday 9-year-old girl. Okay, she just wanted to do what Dad was doing. Fine. So, simple, safe, predictable, consistent, 1% per week. That's what we were looking for. So, that being said, let's keep on moving forward. What are we looking at the moment? Intel. Okay, let's finish up with Intel because that's where we were. Let's get rid of that. Let's get rid of that. Okay, so needless to say, first thing I want to look at, what am I buying it for? Well, the stock is currently at 1944. So the 1950 is going to be the closest. Big sexy, what do I think about annuities? Okay, big sexy annuities for old ladies. Those are for people who have so much money they really don't care that they're only getting 5% per year. There's nothing wrong with it. Okay, but if you're in a position where you can take a $500,000, throw it into something, just forget about it and get your 5% per year, yeah, fine. Nothing wrong with it at all. Me, I like 1% a week. Because 1% a week, especially on a $500,000, that gives me $5,000 a week to play with. $5,000 a week is $20,000 a month. I'm not quite sure what you're thinking about your money. Okay, do you need it to get more than 5%? You know, somebody might have millions upon millions, and let's just throw $500,000 into an annuity. There are people out there like that. Unfortunately, I'm not one of them. Okay, I would never buy an annuity. You're basically giving your money to someone else, saying, here, I don't want to deal with it. You do what you want. Give me 5% a year. Do you honestly, think to yourself, do you honestly think that whoever is giving you 5% per year in that annuity, what do you think they're doing with that $500,000? I mean, seriously, think about it. You think they're putting it on a shelf and just letting it sit there? No, they're working the hell out of it. They're lending it out, they're investing it, and they are trying to make money off of it. So I'll tell you what, why don't you give me the $500,000? I'll give you 20% a year. That's 4 times as much as what the annuity's offering you. Anyway, let's keep on going. So Intel, at this moment in time, 1944. Okay, fine. I like Intel. I don't mind Intel. Lockheed Martin. We'll take a look at that in a little bit, Dennis. All right, hold tight. So 1944. The closest strike price to got to prove I'm human. There we go. They come up with that test every other day. Every other day I got to prove that I'm human with TikTok. That's okay. Fine. I don't mind. 1944. That's the current price right now. The closest strike price to 1944 is going to be the 1950. So if I buy it first thing tomorrow morning and I pay this price here, I can turn around and sell it to somebody else for 1950, which is a couple pennies more than I paid for it. Okay, fine. But that's not what I'm looking for. I'm looking for this right here. It's called the premium. It's like an insurance policy. So you may or may not know this, but stock options were originally an insurance policy for people who had big accounts. So if you were in fear of your stock going down, you'd buy a call or you'd buy a put, an insurance policy. And then somebody figured out how to trade them. Like Big Sexy's got something to say. I put $1 million into annuities because my house is paid off, my truck is paid, my car is paid off, my boat's paid off, my motorcycle's paid off. Okay, it says, okay, Big Sexy, you know, more power to you. Sounds like you're doing good.
Battery.
Sounds like you're doing good. I got to turn this thing off. Hold on a second.
Power off.
Yeah, that was my external speaker so I can get some music in here. So sounds like you're doing good. So you're here. You want to put your money into annuity? Hey, fine. You know, $1 million into a 3%, a 5% annuity. What is that? $50,000 a year. Like I said, I'll give you 20%. Anyway, let's keep on going. So if I'm buying at 1945, I'm selling somebody the rights to buy it from me for almost the exact same price I paid for it. Okay? And I'm collecting 43 cents a share. Well, 43 cents a share is 2%. That means I can make 2% this week off of Intel. Well, think about it. 2% a week is about 100% per year. Because there's 52 weeks in a year. If you compound it, it's going to be, about 100 and... Hold on. Let's figure this out. Figure it out exactly. Right here. Weekly compound interest calculator. Didn't exist, so I had to create it. So we take $1. Okay. $100. We don't put in any money, zero money, $0, 2% weekly, 1 year comes to 280. It's 180%. Okay, 100. Okay, 2% a week. That can't be 180. It's got to be more than that. Okay. All right. So it's 180% for 1 year at 2%. That can't be right. Because 1% a week is 50% per year. 2% a week should be 100% per year. Should be. I'm missing something. Anyway. Oh, crap. And my house is paid off in Florida. Oh, good for you. I'm glad you're doing well. All right. So, anyway, let's get back to where we were. Here we are. All right. So I like Intel is paying 2% a week. Let's take a look at the numbers and let's actually do a covered call so you know and you see what it looks like. So here we go. Now, I like the numbers. It means I'm making more than 2%. Wonderful. Great. What's the chart telling me? Because the chart is telling me a story. This is the 1 year chart. The high, the low, where was it? Where is it? Where is it going? We already did all that. Now, let's take a look at the 90-day chart. What is it doing in the last 90 days? Well, that would be right here. And I'm looking for the exact same 5 things. The high, the low, where was it? Where is it? And then you take your finger, where's it going? Down, up, down, up, down. Not a good time to jump into Intel, but take a look at where it is now. Let's zoom into the last 90 days. Okay. The last 90 days. Here we go. 90 days ago. Sorry, that was the last 9. This is the last 30 days. High, low, where was it? Where is it? Look at the direction. Down, up, down. Here, we are getting close to making a new 30-day bottom. This, just like Apache, what we saw a couple of minutes ago, is bottom fishing, looking for a new bottom. So I want to keep my eye on to find out where is the bottom. Once I find the bottom, great. That's where I want to jump in, turn around, watch it go back up. Once it finds the bottom. See this bottom here? Okay, it comes down. Here's the bottom. 2 days to the upside. I want to jump in on the 3rd day. See here, we haven't found the bottom yet. It could be tomorrow, it could be the next day, it could be the next day. So yeah, we will be looking at Intel for the next couple of days. So I'm going to put Intel down for next week. It's already written down for next week. All right, so is what it is. All righty. Good evening. Intel looks good. Yep, you're right. To pick options. Okay, that's good too. Can we check out Caterpillar? All right, well, let's take a look at Caterpillar. Renewable Energy wants to take a look at Caterpillar. C-A-T. C-A-T. Here we go. Caterpillar. Ouch. No. Hey, now I'm not even going to bother looking at everything because I saw this right here. It takes 3 seconds. Where's the high? Where's the low? All that kind of nice, neat, fun stuff. Look at, here's your 30-day high. Now she's coming back down again. Exact same thing we saw for Apache. Same thing we saw for Intel. We are now seeing on Caterpillar. Here's the high. It's dropping down. Previous 30-day bottom shoots up, profit taking, coming down. Now we're looking for the new bottom. Once we find it, turns around, we're going to write Caterpillar down for next week, because as soon as we find the bottom there, C-A-T, there we go. Okay, so that being said, what do we have next? Shomley Goodman, TXRH. I could say no now, dude. I've never heard of that. And usually, when I don't know something, now I've been doing this for long enough to know that TXRH is going to be a no. You ready? Monthly options. Yeah, that's a no. I don't do monthlies. They just don't work. Terribly sorry. Nick Chalk 2. Greetings from Maryland. Well, greetings to you too. Let's keep going. Where can I find a list of stocks that you like? Chasing Jack, I'll tell you where. You ready? Grab a pencil, piece of paper. Pencil, piece of paper. Grab some mascara. Hey, reach deep in that pocket. Get out that lipstick. Anyway, I don't judge. Really, I don't. All right, so Dividend Kings list 2025. Dividend Aristocrats list 2025. Dividend Champions list 2025. Dividend Contenders list 2025. And then let's follow it up with Warren Buffett's list 2025. That's 5 lists right there. That alone will give you right about 300 different companies. You take those 300 companies, you throw them into a calendar. This is called an EX dividend calendar. It tells you exactly when a stock is going to pay out its dividend. So why is that important? Well, because if the dividend, okay, Coca-Cola on the 14th, the dividend causes the stock to go up in value. So if I know when the stock's going to move to the upside, I know when I'm going to buy it. See, the dividend's here. I want to just buy it before the dividend because then the stock goes up in price. That allows me to have the odds and probabilities in my favor. What's your broker's fee for options? I think it's like 15 cents. I think. If you had to do this all over again, what investment tools would you use? Okay, no, I would not use Fidelity. Okay, now 15 years ago, I wrote a book called Choosing the Right Trading Platform. Okay, I looked at about 20 or 30 different trading platforms. Fidelity was one of them. Okay, 15 years ago, it wasn't very, I didn't like it. Okay, plain and simple. Thinkorswim was the only one that had the trigger trade available. Okay, and then they came out with the seasonality. It's like, oh yeah. Then they had the dividend calendar. Tells me when they're paying the dividend. Had everything I'm looking for. So why would I go anywhere else? Yes, I did try Fidelity. Didn't like it. I like Thinkorswim, and I also like Robinhood. Now, I like Robinhood for a different reason. Okay? I don't like the online version of Robinhood. I don't like that one. Okay? I don't like the online version of Thinkorswim. I like the what do you call it? The mobile app for Robinhood. I don't like the mobile app for Thinkorswim. Now, I'll use it once in a while if I'm out on the road, broken down somewhere, and I need to make a trade. Yeah. Okay, James. Fidelity is so convoluted. World you want to live in, girl. Oh, back again. Can someone tell me what stock we are on? Okay. Hold on a minute. Hold on a minute. Before we go much further. Oh, we have more garbage. Garbage. Nothing we know. It's called Texas Roadhouse. Okay, don't get me wrong. They have some nice steaks. But here's the thing. It's a monthly optionable stock. If you're okay with doing it once a month and only getting 12 to 24% per year, fine. Do the monthlies. Okay, there are so many of them. How are you going to choose? But I'll leave that up to you. Deidre, do you have 100 shares? I have no idea which one we're talking about. Yes, he does. We the people. What do you think about... Uh-oh, I missed that one. What do I think about OHI? Oh my, what the heck is OHI? Now that's never a good sign. If I got to say what the heck is that, usually means it's going to be a no. Oh, imagine that. Monthly. I don't do monthlies. The numbers just don't work. Sorry. Do you see alerts to tell you when it hits a certain number? Okay, top dat bad baby. Top dat baby. Huh, okay. Top dat baby. Okay. No. See, I have it set up in a certain way. When I buy a stock, let's take a look at Macy's, because I like Macy's. It's been very nice to me. Okay, 1532. 1532, 1548. I'll do the SIP 1550s, pick up 17 cents. That's over 1%. I buy the stock for 15, whatever it is. I sell the option, whatever it is. On Friday, I will take a look at it. I'm either going to be in the money, at the money, out of the money, and then I will figure out, is this something I want to carry into next week? Do I want to let it go? What happens on Friday? We can't really figure that out until Friday comes. What did I buy it for? What did I sell it for? These are all interesting things we need to know. Larry Reed, is there a downloadable Dividend King EX calendar? Larry, okay, go to Google and Google search out EX Dividend calendar, and you'll see a whole bunch of them will pop up. I like the ones on Thinkorswim because everything there that I need. Okay, I can look at the chart, and I can look at my trades that I'm making at the moment. WBA. Actually, Steve, I bought WBA this morning. Walgreens. Let's take a look. WBA Walgreens. Yay, Walgreens. Okay, first thing I want to look at always is the 1 year chart. The high, the low, where was it, where is it, what's the direction? Down, sideways, up, down. Simple. Okay, now, what do the numbers look like? 986. Well, the $10 is going for 19 cents. That is almost 2%. I'm only looking for one, because 1% a week will give me 50% per year. And you have to ask your questions. It's a couple of questions. You got to rattle around in your head. You ready? Question number one. Does it make sense? Buy a good company, sell the rights to somebody else just for the week, just for 5 days. If it hits your target, great. You just made a 1% profit or a little bit more. Fine. Go find another one next week. Now, Macy's, if you take a look, just for the fun of it, let's do this. Just for the fun of it. Okay, so here's my website. You will see these are all the trades I did last year. From week number 1 all the way to week number 52. And they're all posted. So let's pick up one right here. Bump, 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 bump. How far back do I got to go? Wow. Lovely. Keep going, keep going, keep going. Week 11, 7, 5, 4, 3, 2. And week number 1. Here we go. You ready? Just click on any one. That shows you all the trades I made. All right. Macy's, General Motors, Ford, CVS. I made 2.1% week number 1. Over here, 2.39%. And we have CVS, General Motors, LUV, which is Southwest Airlines, Comcast, and Ford. Okay, week number 2, 1.3%, Macy's. Macy's. Week number 5, Macy's. Week number 6, Macy's. Week number 7, Macy's. Week number 8, Macy's. Week number 9, Macy's. Week number 10, Macy's. Week number 11, no Macy's that week. All right, let's turn that on. Let's turn that light off, and we turn the fan on because it's getting a little warm in here. Okay? Yes, I'm in Florida. The temperatures keep fluctuating. One day you see me in a sweater, and the next day you see me in a t-shirt. Weird. All right. So if you take a look, these are all the trades I did. you will see Macy's in almost every single week. That's week 11. Week 12, nope. Week 13. Week 14. Week 14, Macy's. Week 15, Macy's. Week 16, Macy's. Week 17, Macy's. Week 18, Macy's. Week 19, Macy's. Week 20, no Macy's. Week 21, Macy's. So on and so forth. It was one of my favorite stocks last year. Almost every single week. I'd buy it, I'd sell it. I'd buy it, I'd sell it. I'd buy it. Why? Because it gives me 1% every week. So why the hell not? Think about it. Why would you not keep trading a company that consistently gives you a profit every single week? It just makes sense. Why not? Oh, okay. So, Dennis Mancini wants to take a look at Lockheed Martin, LMT. Oh, Walgreens. Hold on. Dennis, we're going to finish up with Walgreens first. Walgreens, again, if you take a look at all the stocks I bought last year, bought and sold, bought and sold, bought and sold, Walgreens is on that list also. If I had a company that's consistently giving me money like Walgreens, Macy's, Nordstrom's, Kohl's, MPW, Riot, Riley, U.S. Steel, even Harley-Davidson. Harley-Davidson didn't do as good as I wanted it to do, but it was still profitable. Okay, so Walgreens, here we go. Last year, we were at 22.28. The high of the year was 23.84, and that was the beginning of February last year. Well, here's the bottom right here. Okay, 11.21, and that was 8.09. That's the bottom of the year. So what did it do since then? Shot up, pulled back. Okay, the last 30 days. Here we go. Here's the last 30 days. 30 days ago, we're right around $9. We shoot up to like 13 and a quarter. Then we pull back. Well, yesterday was a new bottom. In a couple of days, these are going to be gone, and this will be the new 30-day bottom. Now, I'm looking and hoping tomorrow is going to be a higher, because here's your bottom Friday. Friday is the bottom. Today was a little bit higher. So what's going to happen tomorrow? I like 2 days of the upside before I jump in. But I already jumped into Walgreens because I already had it, and I'm looking to dollar cost average down. And at $10, well, yeah, I'm going to buy it at $10 because it's Walgreens. They've been around for, you ready for this? 170 years. There's 8,700 Walgreens stores worldwide. Okay, and they actually have some hard, solid products that they sell in retail stores. Over 22,000 retail stores carries Walgreens products. So yeah, Walgreens is not going to disappear overnight. Yeah, they have a little bit of issue. And we all know why that is. You've been hearing me saying it almost all last year. The past administration, the Democrats, did not want to prosecute theft under $900. People would just walk in and they weren't allowed to be stopped. Take the shit, get out. So yeah, they're running into a little problems. Now we're fixing that problem. Let's see what happens. Top Dat, baby. Do you use alerts to tell you? No, I don't. I don't use alerts at all. What about John? I've never heard of John. Devinston. YouTube just got kicked off. Why is that? I don't know. Let's reconnect. All right. AIC3 AI Inc. Yeah, no, sorry. Have you updated your weekly picks on your website? No, I got to keep on doing that. Where do you get the number for a stock? Where do I get the number for a stock? You just put it into the trading platform. It's a trading platform. You know, you have Webull, Robinhood, Fidelity, Thinkorswim, Charles Schwab. Almost any place you can trade a stock. You just put the stock symbol in and you hit enter, and then it gives you the price. Okay? The numbers you want to look for when you're looking at stocks, right here. Okay? The open, 991. The high of the day, 1015. The low of the day, 975. The close, the last trade of the day, 976. The volume, 31 million shares. The bid, 978. The ask, 986. That's all the information on just the stocks themselves. Okay, the rest of the stuff you saw down here, that's the option chain. Now, if you don't qualify for options, you won't see them, because you actually have to apply to qualify for options. Okay, so let's keep on going. KB. KK. All right, you buy Intel and sell the options on Monday, collect the premiums, and wait. What's the decision's thought process on Friday afternoon for that trade? Oh, KK, that's a simple one. You ready? Here we go. Monday I do all the buying and I sell the option on Monday. Okay, fine. We're all in agreement on that. That's what I do. Buy the stock, sell the option on a Monday. Big bull trading. How are you today? So here we go. Friday afternoon, right around 2:30 in the afternoon, I like to sign on because it gives me about an hour and a half before the market closes. What am I looking for? Well, number one, what did I buy the stock for? Number two, what's the stock at right now? Second, what did I sell the option for? What option did I sell and what did I sell it for? Fine. What is that at right now? Okay, great. Is it in the money, at the money, or out of the money? If you don't understand those, we'll go a little bit deeper if you need to. Okay? But basically, you see the line right here? Black down here, purple up here. Okay, the purple up here is in the money. The line right there between the purple and the black, that line, that is at the money. Anything below that in black is out of the money. Now these are calls over here and these are put. The exact same thing. Black is out of the money, on the line is at the money, and the purple is in the money. In the money, at the money, out of the money. ATM, ITM, OTM. Okay, so what did I buy the stock for? What did I sell the option for? Where's the stock right now? Where's the option right now? What is going to happen by the end of the day? Do I just let it expire, depending on where it's at? Do I take it and roll it into next week? Or do I do absolutely nothing? A lot of different moving parts on a Friday afternoon. So for the morning trading group, the most important days is Monday and Friday. Monday's when we buy everything. Tuesday, Wednesday, Thursday, we just look, what's it at? Okay, what's it doing today? All right, no big deal. Friday's the decision day. What do we do? Okay, simple. Don't. Top dat, baby. What about BDC? Okay, so top dat, baby. I'm kind of hoping that, you've done some research yourself. Resin! Fridays are mental. Okay, thank you very much. I get it. James, Marvel on your list. Yes, Marvel is on my list. Okay, I'll write that one down. MRVL. Okay. Top Dat Baby wants to look at BDC. Now, I'm a little leery about this one because I have no idea who BDC is. BDC. Come on, dude, you've been here long enough. You know monthly options is a no. Remember the rules I have? Rule number one, if you don't understand it, don't buy it. So why are you asking me to look at something you don't understand? If you don't understand it, don't ask me to take a look at it. BDC, monthly, that's plain as day. Okay, February, March, June, September, those are all months. That's a no. That's a no. Okay? Let's keep on going. Is he reading TikTok questions? Top that, baby. I'm not reading TikTok questions. Okay, see, I will get to each and every question. Okay, I'm here from 9 o'clock until 11:30. There's so many people here. I got 7 channels. Okay, so TikTok's not the only channel I have. So you're not the only questions I'm reading. Now I stop the questions from scrolling so I can read each and every one of them. I don't want anyone to think that I'm ignoring their question. Now you'll ask a question, I won't get to it right away because you're not the only person here. There are other people here before you. So I have to read each and every question one at a time. Okay, Resin, what are your thoughts on payment systems used by billion-dollar companies? I have a strong feeling there are some small altcoins that will grow exponentially in the next few years. Resin, I'm going to agree with you 100%. Now, when those altcoins, when those payment systems become 20 years of consistent profitability and have weekly options on them, then come ask me. Okay? I'm not throwing the keys to my brand new Lamborghini to a company or a situation that's not even 20 years old. No, it just doesn't work that way. Okay, when you get 61 and you have your retirement money and you're relying on the income coming in, you buy something that's not proven, that's something that's brand new. It doesn't matter what it could be. What is it now? Has it paid its debt to society? Has it been in the trenches for 20 years and consistently been profitable? No, no, and no. So if it doesn't have dividends and 22 decades, years of increased dividends, or 20 years of consistent profitability, then it's going to be a no. Picking the brain of an IBM dev who developed the punch card system. I have no idea what that means, but I have I have a funny feeling it's not a compliment. All right, Top That Daddy gets to them one at a time. He'll answer them by 11 or earlier. Okay, yeah, I'll keep going. Oh, Dennis Mancini wants to take a look at Lockheed Martin, LMT. Here we go, Lockheed Martin. First thing, always, always, always. The high, the low, where was it, where is it, and where is it going? Up, up, down, up, down. Okay, not the greatest in the world, but Resin Art was his name. I got a tip from him. Okay, you know what? Anyway, he has a few decades in the trenches. Okay, yeah, I'm pretty sure he does. You know? Bye. See, I'm not looking for a tip of something that might be. That's not what I'm looking for. I'm 61 years old. I have no desire to put money into something and just sit and watch it for years, wait for it to grow. That's not what I'm here for. I'm here for consistency of profitability. Means I want to get paid every single week. Okay? I can't take that stock or that tip, put a bunch of money into it and just wait. That doesn't work for me. Okay? All right. Lockheed Martin, 457. The 457s go for 3 to 4. It's not even 1%. Not even worth taking a look at the chart because the numbers just don't work. Now, don't get me wrong, I like Lockheed Martin, and it does work a lot of the times. It's just not working this week. Okay? Ike Jefferson, 104%. Not quite sure what you mean 104%, but all right. Is this compound, not simple interest? Okay, we the people, it all depends on what you're looking at. Okay? Now, for me, I do simple interest because I'm taking the money out on a weekly basis on one account. The other one is going to be compound interest. They just keep compounding over and over again. But my money that I use to live on a consistent basis, that comes right from my trading account, and that's not compounded because I'm spending it. What's the YouTube channel? The 10-Minute Trader. Okay, all the information is right up here. Okay, right, how do we do this? Right there. Okay, right there. Okay, the 10-Minute Trader. You click on that. That shows you how to get hold of me. Andrea wants to take a look at Dell. Uh-oh. Then I have to pick on Milton McLaughlin for a second because he likes Palantir. And he just doesn't know. But there's nothing wrong with it, the fact that he doesn't know. Oh, come on. Look at that. High, a low. Where was it? Where is it? Look at the movement. Up, down, up, down. Another one fishing for the bottom. Let's zoom in here to the last 30 days. Okay, here's your last 30 days. Your 30-day high, your 30-day bottom. And it gapped down. I love a gap down on Dell. I'm going to write Dell down for next week. And the reason being, this is what? The fourth stock we've seen tonight that's looking for the new bottom. And it's a good company. I love Dell. I do. Okay? Down, up, down. Here we are right here. A little bit of a gap down. Another gap down here. Another gap down here. Nice. This is going to turn around. It's going to shoot up nicely once it finds the bottom. Okay? Dell for next week. D-E-L-L, Dell. Tra-la-la. Okay, so, sorry, Andrea. So, Mr. Milton wants to take a look at PLTR. So let's do it. PLTR. PLTR. Well, no. Reason being, it's currently at the high of the year. What would possess you? Think about this. What would possess you to buy something at a high? It's kind of like, I don't know, standing on a ladder. Okay, think about it. Kind of like standing on a ladder, waiting for someone to bring you a taller ladder. Has it hit 86 at all this year? No, it hasn't. What makes you think just because you bought it, it's going to hit 86? Because the high is right here, just below 86. If it was worth 86, it would be above 86. But it's not. Not at this moment. Today was a little bit of a pullback day. Okay? It's a new low today. Okay, it went up. Now it's coming back down. But that's not the only reason why I don't like Palantir. Hold on. It gets worse. Kind of does. PLTR. So let's go to Yahoo Finance. Put PLTR, and find out how wonderful of a job they do with their increased Wait a second, there's no damn dividends. Why would you come to a show about dividend investing and then ask me about a stock that has no dividends? Something's not right here, dude. Right, Milton? The name of the show is Dividend Investing for Weekly Cash Flow. Palantir has no dividends, which means they don't share their profits. So why the hell would I bother with them? Just curious. Eric. So monthlies are a no. Are monthlies still a no on the week they expire? Of course. Because Eric, let me show you something and I'll tell you why monthlies are a no, regardless. Okay, let's go back to here. Okay, let's go to O Realty. Everybody loves that piece of crap. Okay, so here we are right now. O Realty went sideways for a bit, shot up, pulled back down, went up. Now she's back down again. Here we are right here, 54.49. All right, it's a monthly optionable stock. Okay, you can only trade it once a month on a covered call. So it's currently here. Okay. Here's the last 30 days. Down, up, down. Well, right now it's not a great choice, but hold on a second. This is a month worth of movement. Okay. Down, up, down, up, down. Even had a gap here. Okay. But here we are now. Now, with the last week, this is the issue you're going to have. It's at 54.80. The 55s are going for 70 cents. Brandon's Corner. Did you look at Walmart yet? Nope. A friend wants to trade it, but it's at a high, and I told him to wait. Just want to be sure. Brandon, I'm going to answer that question in a second. Hold up. Okay. So currently, O Realty is at 54.80. The closest strike price is going to be the 55. Well, it's paying 70 cents. Well, that's over 1%. Shouldn't that be good? No, it's 1%, a little over 1% for the month. So you might get 14 or 15% for the year trading this one on covered call. But here's the thing. If you miss, okay, you have to wait another 30 days in order to be right. And if it goes the wrong way, well, you're SOL. Okay, and that's not a new stock. That's shit out of luck if it goes the wrong way. And how are you going to tell? Here's where it is now. 30 days ago it was here. Great. Now tell me where it's going to be in the next 30 days. All that movement. Where's it going to be in the next 30 days? It's not that easy. The next 5 days, I can give you a rough idea. It should be somewhere down around here on 53. Because it's in a downward motion. Because it went up from 51.50 to 56. That's $4.50. $4.50 on a $50 stock. That's roughly 9%. 9% increase. Yeah, profit taken until it comes down, until it's done. Where's that going to be? Nobody knows. But hypothetically speaking, she should come back down to this area down here. Hypothetically. But where's she going to be in 30 days? I don't like monthly options because it's just too damn difficult to figure out where is it going to be in 30 days. And the numbers, 1 and 1.2% for a month, that doesn't work for me. 1.2% a month for a year, that's 14% per year. No, I would prefer 50% per year. Monthlies, for me, just don't work. Terribly sorry. All right, so Brandon, Walmart, Wally World, WMT. Yeah. Dude, I honestly don't know what the dude's thinking. Think about it. Okay? A year ago. Okay? Ready for this, Brandon? A year ago, we're at $55. Now we're at 99. That's almost a 100% increase. Okay? She went up, profit taken, 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 up. Going to have profit taking next. This thing's going to come back down again. Standing on a ladder, waiting for someone to bring you a taller ladder just doesn't make sense. Okay? I've never heard anybody say, hey, it's at the high. Let's buy it and wait for it to go higher. No, I've never heard that. I've always heard buy low, sell high. Wait for the profit taken, jump in, and when it goes back up, then sell. Buy, sell, buy, sell. Unless you want to buy it and just hold on to it for the rest of your life. And there's nothing wrong with that. Nothing at all. What else do we got? What other questions do we have here? Opinion on Lucid? Hell no. He wants to do a call. Told him it's a point of profit taken. Yeah, you're right. It is. Point of profit taken. It goes up. People take their profits and jump the hell on out. Okay, Andre, we already looked at Dell. MU we'll take a look at next. Okay, MU. Now, I like MU. Doesn't have dividends, but I do make exceptions once in a while when it's on someone else's list of someone that I respect as a professional trader, such as Warren Buffett. A lot of his stocks aren't on my list, but I'll trade them anyway because I have this saying, if it's good enough for old Warren, it's good enough for me. So here's Micron right here. High, low, where was it? Where is it? Look at this. Up, down, sideways, and down. So we're right here at 89.92. The 90s are going for 210. The 91s are going for 183. The 92s are going for 146. The 93s are going for 112. Every single one of those is going to give you more than 1% with Micron. But the big question is, do you like Micron? And are you okay with holding on to it until it hits your target? Well, at this moment in time, if I bought it here, my target would be 91. Well, that's a 2% trade. Am I okay with that? Now, am I willing to hold on to Micron for however long it took. Well, look what the chart is. Here's the high way here. That was back in May. The bottom was towards the middle of March. Right? March, she jumps up, comes back down, goes sideways. Well, we're here now. Where's it going next? Well, let's take a look and see if we can guess. Okay, a year ago we're at 86.93. We bottomed out at the end of February at 79.90. Okay, we have a double top in the middle of June, 157.54. We dropped, so sideways, last 90 days. We're looking for the exact same thing, 90 days. The high, the low, where was it, where is it, and what's the movement? Up, down, up, down, up, down. It's not that difficult. Last 30 days. The last 30 days gives me a good idea of where do I think it's going next. Well, next, same thing, 5 things. High, low, or is it that one over there? Could be that one. Okay, high, low, where was it, where is it? Up, down, up, down, up, down. Well, it's here looking for that bottom again. Another one. Andrea, that's what, 5? 5, Andrea, you pointed out, all bottom fishing, looking for that new bottom. So I'm going to put MU on my list along with the other ones. Oh, it's already on my list. All right, that being said, let's keep on keeping on. Questions. Okay. Going through all the questions. What's the YouTube channel? 10-Minute Trader. Okay. Anik Gabriel Lou. Well, thank you for that, Miss Anak. Fabiano. Thank you for that question. Nothing to do with what we're talking about, but okay. Alice. AAL. American Airlines. AAL. Okay. Interesting. Here's the high. Here's a low. Here's where it was. Here's where it is. Look at this. Sideways, down, up, down. Well, it's coming down from the high at the moment, which means it's going to be looking for a new 30-day bottom. So let's find that one out. Before we do that, 1670, we're looking at the 17s. The 17s are going for 18 to 20. See, 1682 is the current price. The closest strike price is going to be the 17. It's going for 18 to 20 cents. That's more than 1%. Well, that's a yes. Where I went to school anyway. Let's get rid of that one. That just confuses me. All right. A year ago, we're at 14.26. The bottom of the year was in the beginning of August. That was $9. Last 90 days, that's the last 3 months. The high, the low, where was it? Where is it? What's the direction? Up, down, up, down. So it's going to be a no at this moment in time. Look at your last 30 days. Here's your last 30 days. Up, down. It's looking for a new bottom. So we will put American Airlines on the list for next week. While we search for that bottom. Ooh, Dafa wants to take a look at CF. CF, Consolidated Freight. CF. All right, interesting. High, the low, where was it? Where is it? Up, down, up, down. Here we are right here, 92.47. The 92.47, great. 94.87. Wait a minute, 90. We'll be looking at the 93s. The last trade was 92.47. So hypothetically speaking, we should be looking at the 93s. I hate it when the market maker does this. They purposely make it difficult for us people after hours to make sense of what's going on. So hypothetically, it should be around 93. So it's very important in the morning before you buy anything. Wait for these things to fill and start changing. Because you don't want to put an order in and then they change the numbers on you and then you're just like, oh, you know what I mean? All right. 93 is going for 95 to 165. That's well over 1%. What the numbers look like. Okay. A year ago, we were at 75. The bottom of the year, 69. And that was in the middle of July of last year. Last 90 days, looking at the exact same thing. High, low, where was it? Where is it? What's the movement? Up, down, up, down, up. Well, looks good. Let's look at the last 30 days. Because the last 30 days gives me a good idea of where it's going next. And that doesn't look that bad. Look at it. Down, up. Here's your 30-day bottom right here. Shoots up, pulls back. Now 1, 2, 3, 4, 5, 6. 6 days to the upside. We have all this space up here to go. But before we make the decision, because so far, 1 year looked good. 90-day looked good. 30-day looks good. The fourth chart I want to look at is the seasonality. Now, I don't know if you've seen the seasonality before, but the seasonality tells me what does the stock normally do throughout the year. Okay, year after year after year. Because stocks move for two reasons. A known reason or an unknown reason. Either we know why or it's just guesswork. What does that mean? Well, unknown, you have a lawsuit that comes out of nowhere. A natural disaster. A storm, a hurricane, an earthquake, tsunami, weird shit like that. Yeah, that's something you cannot plan for. What about a known event? Earnings, that's known. Dividends, that's known. Conference calls, splits. These are all things that are written down that you can plan for. Seasonality is another one. Well, what is that? Winter, spring, summer, fall. Well, how do stocks react to Christmas? How do stocks react to summer? How do stocks react to New Year's, Easter, Memorial Day, the fourth quarter? The fourth quarter stocks have a tendency to go up. Look at this. That's the second quarter. Okay, first quarter, second quarter. Look, the third quarter and the fourth quarter. Nice upward movement with CF. Okay, does it make sense? Well, what's it going to do right now? Well, the blue line represents right now. So the next couple of weeks, look what's happening. It's not that difficult to see that. Okay, here's where we are right now. This is today. Look at that for the next couple of weeks. It's going to go nice upward movement. Now that's historical information. So that's 2015, 2016, 2017, 2018, so on and so forth. For the last 10 years, what is the average movement? That's all that means. Average goes up. Okay, it makes sense. Let's get back. Let's get out of here. Back to the standard chart. Okay, so what do the numbers look like for CF? Now, I like CF. Let's actually do a trade. We'll do a 93 covered call on CF. So let's get rid of this. First thing I want to do is I want to change this right here. Where it says single, I want to change that to where it says covered call. So, click on that. Covered call. Here it is. And we said we want to do the 93. Here we go. 93. Now I want to do just one contract. And I want to do it at the market order. Open and confirm. Here's what it sounds like. Are you ready? Buy one covered call CF 100. So it's in the weeklies. 7 February 25. That is this coming Friday. The $93 call strike against the CF stock at the market to open. Okay. What's the most I'm going to make off of this? Well, it's right there. Remember when I said simple? Well, this is one of the easiest strategies there is. Remember when I said safe? Well, there's nothing safer than a covered call or just plain old buying the stock. Buying the stock is the safest one. You just buy it. That's it. And then you own it. But it has no income unless the stock goes up. But if we're going to do a covered call, I'm going to buy the stock. Now I own it. Now I'm going to sell it for the same price I just paid for it and collect the premium. Well, on this premium, it's 183 per contract. Now, remember when I said consistent and predictable? Well, predictable, I already know what I'm going to make on this trade before I even do it. Most people just buy a stock and hope it goes up. I could care less if it goes up. I want to collect the premium. So if the stock stays exactly where it is, I'm still making my money. So stocks only go 3 different ways. Up, down, and flat, which means sideways, nowhere, okay? So here on this trade, the break even is 91.17. The stock is currently at 92.47. The break even is $1 less. So if the stock goes up, I'm good. Stock stays the same, I'm good. The stock can even come down a little bit and I'm still okay. They only go 3 different ways. So if you're good in all 3 different directions, why the hell not? Capital. How much money should one start with? Only start with what you're comfortable with. That's it. Okay, now, I have 98% of all my money invested in the U.S. economy through the stock market. I own companies like U.S. Steel, Walgreens, Macy's, Foot Locker, Harley Davidson. And every single week, I get a covered call. I do a covered call against them, and I get over 1% every single week. So it makes sense to me. Now, I'm here every night, except for Friday nights and Saturday nights, because the market's not open on Saturday, and it's not open on Sunday. So what's the point? All right. All righty. Vernie Chu. No to PLTR. Okay. Rule number 1, never buy something you don't understand. Okay, if you understand PLTR, then you know PLTR has no dividends. So why are you suggesting PLTR in a dividend investing trading strategy show? It boggles my mind when people do that. Okay, if you don't know what your company is, don't ask me to figure it out for you. Because I already know what PLTR is. It's a no. No dividends, no thank you. The name of the show is Dividend Stock Talk. The main word being dividend. PLTR has no dividends. It's a no. From the get-go. It's a no from the get-go. All right, so here's the trade. Buy one covered call CF100. Those are the weekly, 7 February 25. That is this coming Friday. The $93 call strike against CF at the market to open. That's the trade. The most I'm going to make off of this one, when I say predictable, I want to know what I'm making before I even do it. $183 is what I'm going to make per contract. Okay, per contract. Get my calculator out. And calculator up here. Here we go, right there. Okay, 183. Let's clear that out of there. 183. And I'm going to divide it by the cost of the trade, including commissions. 9,117. 9,117. That comes a grand total of 2%. Well, 2% a week is over 100% per year. Ask yourself the question, does it make sense? Do I like Consolidated Freight, CF Industries? Does it make sense to me? Am I willing to hold on to it until it hits my target? What's my target? At this moment in time, my target's 93. Well, the stock at the moment is at 92.47. Am I okay with holding it until I get it? Especially if I can get 1 to 2% every single week. Why the hell not? Okay, Felix wants to take a look at Marvel. Marvel. Let's get out of there. Let's get out of there. Let's change this back to that. Let's go back to here and let's put in Marvel. MRVL. Here we go. Yay! Holy crap. What is that? What is that? That's ugly looking. But let's go with the flow here. The high, the low, where was it? Where is it? Where is it going? Sideways, down, up, down, up. Okay. Let's take a look at the numbers. Marvel, at this moment in time, 114.50. The 115 is going for 255. That is more than 2%. If you're okay with more than 2%, fine. Let's take a deeper look. A year ago, Marvel was at 67.60. The bottom of the year was August 5th, 53.36. From there, look at that shoot up. That looks nice. The last 90 days, the high, the low, where was it, where is it, what's the movement? Up, down, up, down, up. Look at this gap. That gap has a tendency to fill, which means that baby's going to go up eventually. But what does it look like for this week or for next week? Make up your mind. What does it look like? Well, the last 30 days, here we go, same thing. High, low, where was it, where is it, what's the direction? Down, up, down, up. Okay, going to the upside. What happened today? Today is a little bit lower than yesterday. So what does that mean? Well, at this moment in time, we really don't know what it means. Because it could be an anomaly. It could be just nothing. Tomorrow, it could be higher and continuing that trend. Could be, but we don't know until tomorrow. But let's take a look at the numbers in case we like it. 113. Okay, the 114s are going for 310. That's more than 2%. Okay, that makes sense to me. But the big question is, do you like Marvel? That's it. Do you like it? And are you willing to hold on to it for as long as it takes to hit that strike price? That's a good question. I'm going to put Marvel down because it looks good. MRVL. MRVL. Okay. We're almost getting ready to answer questions. Let's take a look. So capital, how much money should you start with? That's different for everyone. Okay, there's over a couple hundred people here. Everyone's going to have a different amount. Whatever you think is right for you. And then decide, well, how do you want to do it? Do you want, now me, all my money's invested. Why? Well, I believe in the American economy. I believe in Cracker Barrel, Walmart, AT&T, IBM, Goodyear, Home Depot, Lowe's. I believe in all those companies. My aunts, my uncles, my brothers, my cousins, my nieces, my nephews, the guy down the street, the lady next door, they all work in the U.S. economy, which means they all participate in one way or another in our economy. We all go to work, we all contribute. All right, let's keep on going. P&M and ING. Most people just have a name, but okay. I'm new. Can I learn all those from you, please? Yes, you can. Let's keep on going. Alice, Walgreens reduced its dividend a few days ago. Yes, Alice, I'm well aware of that. Now, I already have Walgreens, and I've been following Walgreens for quite a while. So every once in a while, I cut a little bit of slack for some of the companies that I've been following. Now, 3M, okay, they've been in business for over 100 years. And they had 62 years of increased dividends. And last year, they decreased their dividends. Did I cut them off the list? No, because they're still 3M, still consistently profitable. Just because the CEO did something stupid, not his fault. Same thing with Walgreens. Do you ever gamble a little with stocks? Sometimes I do, Rob, and I usually always get burned. So I just try not to do it too much. Miss Cindy, I'm new too. How do we learn? Cindy, the best way to learn, okay, is just keep on coming back, keep on asking questions because you'll get it. Okay, some of these terms, some of these words will be new to you, but eventually, after hearing them over and over and over again, you say, I remember what that is. Oh, I know what that is. Oh, I know what that is too. It's basically, oh, I get it. You know? Okay, Herdis. Okay. Did you decide to drop Walgreens now that they canceled their dividend and had net losses in earnings? No, I'm still trading Walgreens because I've been following it so closely. I know exactly what's going on with it. If the EX dividend is already over, do you still trade it or pick another one that's 2 weeks ahead? Okay, Dafa, great question. Really, really is. It's always about the numbers. Okay, what is the chart telling me? Is it the right time to buy or is it not? Now, every once in a while, I will look at stocks that are coming up with their dividend. Perfect opportunity. But everything's not lining up. So I go to my fallback stocks, and I have a few of them. Walgreens is one of them, Macy's, Ford, General Motors. That means if I can't find a good dividend stock with a dividend coming up, I'll go to Macy's, I'll go to Walgreens, I'll go to US Steel, I'll go to a company that I'm used to and that I know. Bruce Jet Lee, 5,000. What should I do? Throw a pizza party, dude. Pawan Kumar, how are you today? Okay, so Bruce Lee. Okay, my advice would be to take your time. Don't jump into anything you don't understand. Ask a bunch of questions. Once you understand it, once you get it, then invest real money. I always tell people, start out with a paper trading account. It's kind of like playing with Monopoly. Okay, you try to play Monopoly in the stock market. The money's not real, but the numbers are, and the skills are. Okay, so let me show you something real quick. Okay. Okay, see these 4 accounts? 1, 2, 3, 4. The only difference between the 4 is one of them is a paper trading account. Yep, I've been trading for 20 years and I still paper trade. Now, the reason why I still paper trade is because I'm constantly looking at new ideas, new trading strategies. All right, well, what if I do this, this, and this? Does it work? Can I consistently do it over and over again? Because you may think this is the only strategy I do here. No, this is the only strategy I give away for free. Now, I do have a paid group where people pay to watch what I trade and get to, look over my shoulders and ask me questions. Different story. A lot of different trading strategies. But here, for free, I only teach one. I got to draw the line somewhere. Okay. Stevie Ray Archer, huh? How do you address the forced dividend income issue? Okay, Doric, dude, you have to explain to me what is a forced dividend income issue. I've never heard of that before. Now, I've been trading for 20 years, but I never heard that term before. But we're going to look at Stevie Ray's Archer. A-C-H-R, Archer. Archer Aviation, no. Okay, this thing was $3 a couple of weeks ago. Now it's $9. What makes you think this thing has 20 years of increased profitability? 20, 2 decades. No. Getting a little tired. Eyelids are getting heavy. Is this similar to Dijkstra's system? Okay, Miss Cindy, I don't know who Dijkstra is, so I honestly couldn't tell you. Stevie Ray, I don't do Palantir. Okay, DCB, SCH, seriously? Look for SCH, okay? Seriously, look at the numbers. Go to a financial website and see how consistent SCH has increased its dividends. Sakoi Trade Bateau. Yeah, I have no idea what that means, dude. Okay, I'm here. This is English. I have no idea what that meant. World you want to live in, girl. Would you look at U.S. Steel, Coles, and Riot? Oh. U.S. Steel, Coles, and Riot. Okay. U.S. Steel. Let's take a gander at it. Now, just to let you know, I do have some U.S. Steel, I do have some Coles, and I do have some Riot. So I think you're a little bit sneaky there, girl, asking me about the ones I actually own. Okay, U.S. Steel a year ago was at 46. Jumps up to the high of the year, 48.13. Bottoms out in September. Okay, I actually had it when it bottomed out in September. I actually bought some then. All right. There's the bottom right there in September, 27. The last 90 days, which is the last 3 months. The high and the low, where was it? Where is it? Okay. Up, down, up, sideways. We're at 36.44 at the moment. Okay. Last 30 days. Different picture, right? Here's the high. Here's the low. Here's where it was. Here's where it is. Look. Up, sideways. That's basically it. Okay, now, I bought you a steel at 41. Do you see where it is right now? 36. Do you know where 41 is? 41 is up here. Not even on the chart. I bought it at 41. Okay, and it's at 36 now. Am I panicking? No. Because I've been doing this long enough, take a look at the numbers over here. Now, it's currently at 36. So the 36 is going for 79 cents, which is 2%. That's cool. But I can't do that because I would be at risk of losing my stocks that I bought at 41. So it's currently at 36. I got to get a little bit more here. So it's currently at 36. So I'm selling the 38s. Okay? 36 is out the money. I'm selling the 38s, which is out of the money. But the 38 is going from 35 to 45. That's more than 1% of what I paid for it. That's how I get my 1%. Now, what happens if the stock jumps up? Well, if the stock jumps up, I just push the option into the next week and pick up another premium. Okay? So, we're at 11:20, so I hate to do this to you, kiddo, but we're just going to answer questions for the rest of the night. I'm done looking at stocks. I just want to make sure I answer each and every question. All right? So, world you want to live in, girl. Come back tomorrow. We'll take a look at Kohl's and Riot. I'll write it down here for you. Kohl's and Riot. Okay, those are the first ones on the list. You show up tomorrow, I'll show you that. Right. Miss Cindy, that's right. Knowledge compounds. Ooh, ENIC. Nice way, nice analogy. Stevie Ray puts everybody will be crashing in and taking profits. Lovely. Kevin Hernandez. That's interesting how you did that. Please don't do that again. Thank you, Kevin. Go fishing when you can. Sega Genesis or Super Nintendo. Wow. I quit playing video games. I think back in the 80s, 90s, early 90s, I stopped playing video games. Have you looked at MU this week? Yes, we did. World you want to live in, girl? We looked at MU a little while ago. 86 is in the house. Woohoo! Alice, how are you? How much? Oh, thanks so much, James. If only I hadn't already purchased American Airlines. Huh? Don't worry about it. You can do a covered call on American Airlines until you hit your target. But be careful to make sure you don't put it too close because you don't want to sell it for less than you paid for it. Alice, what's a trigger trade? Ooh, Alice, that's a good question. Ask me tomorrow when we have more time. Right now we have 6 minutes. I want to go through all the questions. Mario, WTF. Water this fern. You like plants too? I like plants. Water this fern. Okay, Mario. QQQ. How about no, no, no? Mario, ask yourself a question. I know the answer, but I'm just saying if you know the answer. Have you looked at the consistency of profitability with the Qs? Have you also looked at the rate of return the Qs are giving you currently? Just, save you some time. Here we go. QQQ. Okay, the dividends. Okay, number one, the Qs have only been around since the 2020. Okay, 49, 43, that's backwards, dude. 53, 52, backwards. 66, 47, backwards. 50, 54, 81, 22, backwards. 57, 76, 68, backwards, 84. So this thing goes up, goes down, goes up, goes down, and it's only been around since 2021. Tell Hell no. But wait, it actually gets worse. It really does. So let's go to the Q's and take a look at the summary. The summary, right over here on the left-hand side. Summary, news, chart, community, historical data, profile, statistics, blah, blah, blah. Okay, so Q's. Number 1, the dividends aren't consistently profitable. No. Number 2, check out the yield. Seriously, dude. Marion, whatever. The yield, 0.56. Did you hear that? 0.56. That's a tiny, tiny bit over 0.5%. Not for the day, not for the week, not for the month, not for the quarter. We're talking 0.56, 0.5% for the year. I have no idea what the hell you're thinking, putting your hard-earned money into something that's giving you 0.5% for the year. Makes no sense to me. Center Pie. Look at management, money, blah, blah, blah. I have no idea what that means, dude. Okay, English, please. Seriously? Okay. Money management. Okay, dude, you actually got to speak English. Okay, I don't understand that. It makes no sense to me, and I'm terribly sorry. I don't want to sound rude or anything like that, but I'm here in the United States, and here, well, some of us speak that language. I don't. Jim, Pull. I have to do it tomorrow, dude. Can you look at MRK? Nice company. Let's look at it tomorrow. Smart to paper trade to try what works. Yo, Wes, if it ain't broke, don't fix it. It's an old strategy I go by. If it ain't broke, don't fix it. All right. James, patience. James's patience is wearing thin. Yeah, I'm getting tired. It's been a long day. Thanks a million. You want a living girl? Cool beans. Really appreciate it. You're welcome. QQQ is only up 0.5% for the whole year. No, Alice. No. Hold on a second. Please tell me how I can... Please tell me how can manage 1 rupees in trending. Okay, dude, you got to give me a phone call. We can sit, we can chat and go over a few things. Yep, I got that one. Okay, but you got to remember, here in the U.S., we don't use rupees. We use U.S. dollars because I don't understand the Indian market, so I really couldn't tell you about that. Alice... Oh, wait, I see how I misheard. Never mind, all right. How can I start getting into dividend stocks? Polly, just keep coming back until it makes sense. Can $100 make me rich in 5 years? Well, let's check and find out. That's an interesting question. Get the glasses out, and let's go to the weekly compound interest calculator. I'm going to say no, but for the fun of it, let's take a look at this. And the reason why I'm going to say no, because you're asking me that kind of a question. Can $100 make you rich in 5 years? Well, it's subjective, and I'm going to explain it to you in a bit. Okay, so $100. I'm going to assume you're not going to put any more money into it, so that's that. Okay, 1% per week, because that's what I'm teaching at this moment in time. There are other strategies that can make more, but I really don't think you're going to be consistent with this. Because somebody with $100 is not going to be consistently doing this every single day. Okay, so 5 years, starting off with $100, you're going to end up with $1,329. So yes and no. Now, the reason why I say yes and no, because it's in context. And what do I mean by that? Well, context. Here in the United States, it's not going to do squat for you. But in the world, more than 50% of the world's population live off of $1 a day. So yeah, in the whole grand scheme of things, yeah, you will be rich. But here in the United States, no. Terribly sorry. Just starting to dive into stocks myself, thought of those that have been through Chapter 11, like SaveQ. Not on my list, dude. Okay, I only like companies that are consistently profitable. That's 2 decades, 20 years of consistent profitability. My throat's getting really sore, so I'm going to quit for the day. And I'm going to try not to talk at all tomorrow. All right. That being said, it's past 11:30. I'm done for the night. I'll catch you guys again tomorrow. Have a nice night, everyone. And we'll see you tomorrow. Thanks. Thanks for that. Confirms my thought. You're welcome. James gave me a call last week and didn't try to sell me anything at all. All right, Jack. Oh, holy shit. Are you kidding me, Noel? Coney? Seriously, dude. Take a look at those numbers. No. Coney? Yeah, take a look at the numbers. It's not even a year old yet. All right, so we're out of here. Have a nice night, everyone. Oh, nobody even on YouTube.